and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always, Shruti Mishra, and from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. SaaS firm Freshworks records an operating revenue of $196 million, growing 19% on a yearly basis, narrows its operating losses by 67% in the first quarter of this calendar year.
Quantum cybersecurity startup QNU Labs bagged 60 crore rupees in a Series A round. Round was led by the National Quantum Mission, will use the funds to expand offerings and enable development of its solutions.
Anveshan raises 48 crore rupees in a Series A round led by Wipro Consumer Care Ventures, along with DSG Consumer Partners and Titan Capital Winners Fund. New funds to help expand its manufacturing network, strengthen supply chain and enhance its IT tech platform.
Sadhav Offshore lands investments worth 25 crore rupees to enable launch of critical dry dock facility and support India's maritime ecosystem. The equity round was led by Negan Capital, along with participation from several prominent family offices and high net worth individuals.
An Udayti CII report flags worrying trends in the logistics sector as female participation in logistics sector stands at 7% in FY24, a mere 1% rise compared to last 4 years. The report states that only 44% of NSE-listed logistic companies have one woman in key managerial positions.
Space tech startup Satlio Labs secures $3.3 million in pre-seed funding round. The capital will be deployed to advance the development of proprietary thermal imaging payload and also support expansion of team. Well, those are the headlines we've been tracking for you this evening on What's Brewing Today. Pop culture brand The Soul Store has acquired Red Wolf, a popular name in the fandom merchandise space. The company says the move will give fans access to an even wider range of unique fandom-driven products. As part of the acquisition, Red Wolf's founding team will be joining The Soul Store. And to tell us more about what this acquisition means, how the pop culture economy is evolving in India, and what's next in The Soul Store's journey. Joining me now is its co-founder, Vedang Patel. Vedang, welcome to Startup Street. If you could first confirm if this is a 100% acquisition and what made you bet big on Red Wolf, what made Red Wolf the right strategic fit for the Soul Store at this point, and how do you expect this move to enhance your product offerings and audience engagement? What kind of synergies are you hoping to unlock?
Thanks for having me. So this is almost a 100% acquisition, close to it. There's some technicalities why it's not, but for all practical purposes, it is. We are really excited to have the team on board because I think we started out together and we really looked up to Red Wolf. They are quite the, I think, pioneers in this space, and they were going to shut down. And I feel together, and we could do so much more, and we didn't want that situation to happen. So we decided it's best to just partner together and become a true home of pop culture in India. We really love where the Soul Store is today. And with Red Wolf team here as firepower, I think we're going to become a very dominant force in India, at least, if not global.
All right. Vedang, with the Red Wolf founders now joining your team, how do you plan to integrate their creative vision while staying true to the Soul Store's brand DNA? And will Red Wolf continue as a standalone identity, or will we see a full brand merge?
See a full brand merge. I think where it comes for people having different design languages, the Soul Store is actually a very collaborative space. No one person runs the design on their own. I think we all come together with our own unique flavors. People are fans of different merchandises, like someone will be a Superman fan, someone will be a Dragon Ball Z fan, a Batman fan. Everyone makes that version of it to get that true authentic feeling of what a fan wants. So we're very excited to have this new point of view and, build this out together even bigger.
Okay. The Soul Store has been aggressive in scaling both online and offline. How does Red Wolf strengthen your omni-channel strategy further? And with 40+ stores already live, Vedang, what is the next phase? Are Tier 2, Tier 3 cities or global markets on your radar?
Yeah. So Tier 2 and Tier 3 cities are on our radar. We already are in a lot of them. For example, I think Jodhpur was our latest store opening. We have one in Dehradun. Obviously, the Tier 1 cities is where more than half the stores are, but the next half of stores would be Tier 2, Tier 3 concentrated. yesterday we launched it in my hometown in Navsari, and that's a tier 4 city. So we're very excited about the
Okay.
depth of where the brand can go. Globally, something that we will launch this year, we'll have global stores starting with the Middle East and eventually going to the
Okay.
US and Europe. The main reason is because the Soul Store is truly unique. There's nothing like us around the world, and that's also a very relevant audience to us. So we're very excited to, tap that market too.
Okay. So you have big plans from tier 4 towns to the global markets. But will you be eyeing funds anytime soon to fuel these aggressive growth plans? Reports suggest you're eyeing to raise around 200 crore rupees, if you could confirm this.
So, to be honest, we haven't decided on it whether
Okay.
we whether we go a little slower and just grow through our profits, or we raise some debt, or we go ahead and raise funds. I think that's something that we're waiting to see how things play out. But it's very clear that our ambition might be larger than our purse. For the last 2 years, we've been growing with our internal cash because we've been growing at a certain pace, and the cash flow from operations has been able to fuel that. But
Okay.
maybe our fast-paced growth might need us to take up some more capital.
All right. Now, like you mentioned earlier, the Soul Store's mission is to be the home of pop culture in India. From your vantage point, how has fandom evolved over the last decade in India? And what are some of the newer trends or consumer behaviors that you're noticing?
I really love the way it has evolved in India. I think a lot of it goes to the fact that new Marvel movies or Harry Potter movies are now available in many regional dialects, not just Hindi as it used to be. So very excited about the fact that a large India TG is now relevant to these fandoms. We also love the fact that a lot of Indian fandoms are now coming of play, and we've seen that a lot of our new designs, which are India-based, mythology-based, are selling even better than some of the Western stuff. My favorite is that we decided as a Soul Store we won't do NASA, but we will do ISRO, and we love the response
Okay.
that the Indian consumer has for ISRO, for example. But one cool fandom shift that we are seeing is that what used to be cool in the West is now moving east. So a lot of American fandoms are dying down versus Korean and Japanese anime are now what's the
Okay.
cool.
All right. One final question, Vedang, before I let you go. What is the current growth trajectory looking like in terms of revenues and profitability? And are there any new product categories or exclusive collaborations in the pipeline that you can share a sneak peek of?
Yeah, so I think from a revenue perspective, we closed last year at around about 500 crores, and we have a healthy bottom line of about 6-7% post tax. What we are very interested about now building is the fandom element going stronger. So we will have a lot of accessories like Harry Potter wands, some nice rugs, which would be different superheroes. Because we have a lot of breadth when it comes to apparel, we have backpacks, we have sneakers, but it's now the little things that I think we want to do to get the fan to be truly excited about their fandom.
All right. On that note, we'll have to wrap up our conversation. Vedang, many thanks for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thank you so much for having me. Yeah, have a good evening.
Moving on Investor Eye, Trident Growth Partners has announced the first close of its debut fund at over 1,000 crore rupees. Founded by former senior investors from Premji Invest and IFC, the firm brings together over 50 years of collective experience and a strong track record of backing unicorns and IPO-bound startups. With plans to raise 2,000 crore rupees by 2025, Trident is set to shape the next wave of high-growth Indian businesses across sectors like consumer, fintech, SaaS and healthcare. Joining me now to discuss this further is Pravan Malhotra, the managing partner at Trident Growth Partners. Pravan, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on the first close of 1,000 crore rupees. If you could sort of elaborate on the key factors that contributed to such a strong debut for your maiden fund.
Sure, and thank you so much for having me on the show. So I think there are a few factors that allowed us to get to this point in a relatively short period of time. So this was only about 7-8 months after we first received our SEBI license. I think it's a combination of the team where the three of us have been investing in the Indian growth stage market for over 15 years at this point. So My two partners, as you mentioned, Atul Gupta and Rajesh Ramaya, were basically built a private equity practice at Premji Invest, the family office of Azim Premji, and invested in leading companies such as Lenskart, Flipkart, Amagi Media, Policy Bazaar, and many others. I spent 12 years with IFC building up the growth stage investment business in India and then in Southeast Asia, investing along with my partners in Lenskart, but also investing in Big Basket, Moglix, and many others. So the team has been very active in this stage and is continuing that same journey in terms of how we're investing in this market. So I think that was one contributing factor that has been that our backers really liked.
Absolutely. And, you also have a plan to sort of close the fund at 2,000 crore rupees in 2025, right? So are you seeing the investor interest and momentum continue post the first close?
Absolutely. And I think, we've been very kind of targeted in how we're raising it. So the first close, we focused a lot on sort of founders and family offices that have known our journey, known how we've invested over a longer period of time. So we've had 30 plus founders who've come and backed us. And many are actually advisors to the fund and will work with us and our portfolio companies. We've got two preeminent government fund of funds, so SIDBI and SRI, who have backed us. And now the next segment of our journey is looking at both domestic institutions as well as some global capital, both fund of funds as well as family offices, that will allow us to get to the total 2,000 crore target that we plan for.
Right. And, with the funds that you've currently raised, you plan to lead or co-lead Series B plus rounds, right? What makes this stage of investment especially compelling in India right now? And how many companies are you looking to invest in, and what will the size of these investments be?
Absolutely. So what we find compelling is the risk-adjusted return in this segment to us is probably the most optimal, and that's what we've seen in our prior 15 years of investing. So we come in where companies are de-risked from a technology or business model perspective, yet have built sizable enough businesses, but need capital to continue to fuel their growth going forward. So that's what we find interesting. It's a relatively underserved market if you look at the whole private equity landscape. And most of the funds that are focused in this stage, Series B, C, D, are typically more tech-focused. And what we bring is that, again, that sector-agnostic approach, because we want to ensure that we're investing across sectors. We're not getting stuck in any particular market cycles or valuation bubbles within particular sectors. We'll invest in 10 to 12 companies through the course of the next 3-4 years with this fund.
Right. And, while Trident Growth Partners is sector agnostic, you've highlighted consumer financial services, SaaS, manufacturing and healthcare as key themes, right? So what excites you most about these sectors in the current Indian growth story?
So I think a common theme across these sectors, which is really the India theme, is that a lot of this is really broader consumption-led. So as we're seeing the evolution of the middle class, we're seeing rising incomes, we're seeing a young and growing population. I think that's driving a number of these broader sectors. So consumption is growing beyond tier 1 into tier 2, tier 3. The models in terms of consumer models are evolving along with that. We're seeing the demand for better quality and affordable healthcare, food, education, all rising along with income rising. We're seeing the demand for financial services rising. People want more access to finance, again, getting into tier 2, tier 3. So that's one broad theme that's driving a few of these sectors that we're tracking closely. The next, of course, is the shift from China plus one and the Make in India story that is playing out and probably more turbocharged as a result of this global turmoil that's happening right now. And then the final kind of key area that we're actively tracking is around SaaS, which is, again, driven by AI. It's driven by really interesting product-led companies that are coming up in India and that are creating products for the world.
Right, absolutely. And if you could sort of take us through, as you pointed out, you've made huge investments in Flipkart, Lenskart, Policy Bazaar, Credit B, First Cry. You've got a lot of companies that have IPO'd. If you could sort of take us through your current AUMs and the kind of returns your investors are seeing, do you have an exit strategy? And where do you hope to see your AUMs post this big fund?
So just to clarify, those investments were made in our prior roles at Premji Invest and IFC. So this is our first fund that we're raising right now. And so we'll be looking at investing between 15 to 20 million in 10 to 12 companies. Again, the total fund target is about 2,000 crores. Going forward, again, we want to be disciplined in terms of fund sizes. So we plan to have funds which will be similar sizes, because the stage is very important to us. We feel again that this risk-adjusted return in this stage is optimal. So we don't want to create larger and larger funds where you start having a shift in strategy and end up doing larger ticket investments in later stage companies. So we want to be true to where we really feel that the returns for our investors will be the most optimal.
All right, Pravan, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best with this new fund going forward.
Thank you so much.
All right, on that note, it's time for us to head into a short break. But coming up on the other side, a series of conversation with the National Restaurant Association of India's office bearers on what's aching the small restaurants, impact of 10-minute delivery, and why the association has slowed down talks with ONDC. That and more on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Amid the ongoing tussle with food aggregators over 10-minute food delivery and private labeling, my colleague Aishwarya Anand caught up with NRAI President and also the founder and CEO of Wow Momo Foods, Sagar Daryani. He warned that smaller restaurants are at the risk of shutting down, slammed the misuse of customer data, and says if dialogues fail, the industry is ready to take the legal route. Take a look.
I think we were always given an assurance by them that they would never get into our space. Now, what they are doing through Snack and Bistro, they are selling similar products that we sell in our restaurants. Now, they have all our data. They have generated demand and a trend of demand over 15 years. That data is not shared with us. They have all our data. Nothing stops them from using that data to migrate a customer from a restaurant to the similar product that they are selling from their app or private label. Now, they don't have marketing pressure because they have all the data, they have all the trends. They don't have commission pressure. It's their own business. Now, it's not a level playing field. We feel we are cornered. We feel it's absolutely unfair. We feel it is against the interest and the rights of restaurants. It's absolutely unfair. We feel we are cornered. Our problem is not against quick commerce in food delivery. We are for quick commerce in food delivery, but aggregators doing it, we're not okay. Aggregators, they're doing a great job with aggregators. I think they've really helped in growing the food delivery business. They are here to stay. They're here to grow. We work with them. We agree on many aspects. We don't agree on many aspects. We agree to disagree. We have constant dialogue. Today, both Zomato and Swiggy are our special guests for the event. We have them on the panels. We have them as speakers. They're just a phone call away. But the problem is that, when we don't come to a narrative where we both need a solution, if we have to take legal recourse, we will.
Also, in an exclusive conversation with CNBC-TV18, NRAI Zorawar Kalra confirms advanced talks with Rapido as an alternative to ONDC, even as integration with the government-backed platform slows amid top-level exits. Kalra also weighs in on the service charge debate ahead of the Delhi High Court hearing. Aishwarya Anand brings you that conversation from NRAI Food Delivery Summit 2025.
Platform. I think it is It has low barriers to entry. I think somewhere down the line, it has the opportunity to become a third entrant or a fourth entrant into this particular field. I don't think the NII has paused anything. I think conversations have slowed down. So there are still some issues to be worked out. There's a lot of, the entire ecosystem is not seamless. That lack of seamlessness will slow down adoption rates. Our goal is to have a legitimate alternative. In the current scheme of things, it may not be moving as quickly in that direction, but I don't think anything has been stopped. Things may have slowed down. Things may have been temporarily paused, but dialogue should continue. I still think we all think at the NRI that it's still a good system and it can genuinely function as a legitimate third option in this ecosystem.
You're looking at onboarding Rapido.
Yes.
As they have said, could you help us understand at what stages the discussions are on? And what's so lucrative about having Rapido as an alternative option?
See, whatever the NRA does, it does for the industry. The Rapido model, we are in good advanced discussions. I think something soon can be announced very, very quickly. However, the good thing for the industry will be a far more democratic commission rate. So the commission rates are going to be far, far more appealable to the people. The system has to work in a seamless manner. If there are commissions are low, I'm sure a lot of restaurants will jump on board to Rapido. So I think that's a real, genuine third entrant opportunity there that is going to be a very democratic entry into the whole fray and can add significant value to a lot of people, especially ones that are incurring extremely high commission costs.
Okay. And how does NRAI respond to the Delhi High Court's observation that there is no direct evidence of service charges benefiting the workers at restaurants?
There has been an overreaction to this. It was always optional. It was never mandatory. If you did not enjoy the service, you could take it off anyway. That still exists. So this complication, this new little, change in the legal language has created a lot of confusion. It's created a lot of fear. So even people that are doing legitimate work, passing on the entire service charge to their workforce, are now removing it. What will happen? You either have to increase prices or you have to stop collecting service charge. And as a result, those service charge points that were perhaps very beneficial, important for a waiter or a stewardess were now going to be removed. So who loses here? I don't think the consumer is going to have a problem in paying 10%. Rates can anyway be increased for that purpose. So if it is an entirely optional thing at the moment the rates go up, it no longer remains optional. Then that service charge element can be included in the menu pricing. And as a result, you're now having to pay. So I think the current system is better.
Well, My Designation, which is a fashion and lifestyle D2C brand founded in 2020, has raised $1.25 million in a seed funding round that was led by Multiply Ventures. The company says this capital infusion will help it accelerate its hiring, technology enhancement, offline expansion, as well as entry into new geographies. The brand claims to have built a customer base of more than 5 lakhs and plans to double this user base within the year. For more on this, joining me now is Swaroop Krishnan, the co-founder and CEO of My Designation. Swaroop, thank you very much for your time here on CNBC-TV18. Briefly tell us about the brand, what distinguishes it, and what's helped you to get this 100% year-on-year kind of growth in the last 4 years.
Yeah, so I think few distinguishing factors has been our USP. So we are a niche brand. So that's what we have focused from day one. So it's like any of our products that you see in our website or outlets, you cannot find even a 10% similar product in any of other brands or even outlets that you go across. So we spend 90% of our effort on actually the research and development. While bringing the product, we do a lot of research on what's not available in the market and what other brands are not doing. So that's the area where we focus on. So for right now, I'm wearing a Starry Night shirt. So Starry Night by Van Gogh, it's a world famous painting. But I don't think it's a design that you've seen in a product, like a fashion product and being flaunted like this. So I think, yes, that has been our strength from day one, standing out from everyone else.
All right. So, how do you plan to deploy this $1.25 million that you've raised? How many cities, for instance, are you currently in and which new geographies are you eyeing?
So right now, if you ask me, 80% of the market share we have is in the southern half of India. From Maharashtra till Kerala and Tamil Nadu, we have a very strong base. We have served almost 5 lakh customers till date. And we have a very strong repeat of almost 35% monthly. So right now, we are getting very good customer potential and responses from Kolkata, Delhi, and even northern parts of India. So people are actually seeing the brand, they're getting to know. And yes, right now the first plan is to become very dominant in our current categories and areas, as well as expand to these areas. So right now it's purely D2C, our own website alone. So right now we are slowly starting our incorporation with Myntra. So Myntra is adding us as a portfolio brand in the category. And slowly we are starting our EBO, exclusive brand outlet, in most of these metro cities. So yeah, that's the immediate plan. And then again, team expansion. So right now we are a very small team of just 30 people. And with this, we have been doing this kind of numbers. So right now, as these strong investors came on board, we are getting a lot of value as well as team addition as well.
Okay, so while you have plans to tie up with Myntra, tell us more about your offline expansion plans. How many stores do you plan to have? Will those be exclusive or multi-brand retail outlets? How much additional sales do you think this offline presence will unlock for you?
Yeah. So if you ask me that, currently we have just 3 outlets. So all of these 3 outlets are in Kerala itself because Kerala has been our top 1 market. So right now that has changed a bit. Right now Maharashtra and Karnataka is showing very strong potential. So we are planning to start at least 3 outlets in both the states within the next 6 months. So if you ask me, in the next 12 months, we'll have at least 12 more outlets, EBOs especially. So that's our way of working. We don't do multi-brand outlets. It's purely our outlet because the way of communication, the niche that I told, if it's our own outlet, then only we can convey it very properly. So it's going to be EBOs itself, and you can expect almost 12 outlets in the next 1 year. So that's the basic plan. And again, coming to outlets, the profitability ratio is comparatively very high. So in online, there has to be a very strong bidding. A lot of brands are doing advertisements, but with outlets, you can communicate your vibe directly. People are seeing your outlet, it stands out, it's different. They feel like giving it a touch. They're like, okay, what's this different brand? I want to try it out. So once they try it, it's about the brand quality and the designs, which we are already, I believe, we are good at.
Okay, then finally, what is the longer-term roadmap for your business? How do you expect revenues and profits to grow from where they are currently? What will be the key priorities?
Yeah, so we have never focused much on the rapid scaling. So there are brands that burn a lot of money. They just want to grow 10x, 20x. So we have never done that. It was always to make a profitable business. So that's been the model we have always focused. That's the reason why we were happy with the 2x growth. So 2 years back, you asked me, we closed at 8 crores. The last financial year, we closed at almost 17 crores. And this year, we are actually projecting 70 crores for this coming year. So that too with profitability. Maybe I can aim for actually 100 plus year also with the kind of investors and funds that has come. But that's not the roadmap that we have. We need to keep the profitability. It's the ultimate motive is to build a profitable brand, not just a fast growing brand.
All right, so the focus will very much be on profitability. Thank you very much for your time, Swaroop. It was a pleasure speaking with you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up right here on the other side. Stay tuned.